Tonight, like everyone else, we're going to talk about taxes. Everybody else in Texas down at the legislature is talking about taxes, so we figured we might as well talk about the tax process and how things go here. With us tonight are Glenn E. Smith Jr. and Dennis Hart of the law firm Linebarger, Goggin, Blair, and Sampson. Linebarger, Goggin, Blair, and Sampson is a national law firm with a practice dedicated to the collection of delinquent accounts receivable for governments. For over 40 years now, Linebarger has been providing customized collection programs for its public sector clientele. Glenn, here to my left, Glenn E. Smith Jr. is a lawyer, graduate of Baylor Law School. Sick 'em Bears is what he's doing right there. I'm a horned frog, so I'll get my 2 cents in. He's been with Linebarger for over 25 years, collecting taxes for over 30 years. Dennis Hart is not actually an attorney. He's actually working, but he's been working with the firm for almost 9 years. Before that, he spent 27 years with the Comptroller's office and also the State Property Tax Board, which is, I understand, a predecessor agency or organization. So thank you, gentlemen, for being here. We're very excited to have you. I'm just going to send it over to you and take it away.
Well, Clay, thanks a lot for inviting us. We're excited to be in downtown Pflugerville, of course.
Welcome.
This Monday night.
The metropolis that is Pflugerville.
But seriously, we love to talk taxes, and we understand that some of your commissioners and your staffs needed some help and some questions regarding truth in taxation and setting tax rates. And so the bulk of what we do tonight will be regarding that subject. But in the beginning, I thought we'd first talk about the tax calendar. This is basically taking the ad valorem or property tax process and putting it into a calendar basis. So in the beginning of the year, January through May, the appraisal districts are valuing, discovering, listing, describing all of the property in your counties. And when they complete that by about May 15th, they will mail out notices of values. And for those folks whose property value increases or they purchased a new property or became a new owner, they will also receive a notice of value. And the purpose of the notice of value is to basically warn them or let them know, advise them that their value has changed or maybe an exemption has come on or come off of their property. And so they have an opportunity to appeal that or protest it as it's described in the tax code. And this is what's called on our tax calendar the equalization phase. This is an opportunity for the property owner to go down, tell them what their complaint is or their concern, and then have a citizens panel called the Appraisal Review Board listen to that. And of course the appraisal district will tell their side. And basically this Appraisal Review Board will reach a decision and say your house is worth $200,000 or $150,000 or whatever the dispute is. Once this is done, and hopefully these hearings are completed by July 25th, one of the major events occurs in our taxation process, and the appraisal roll is certified. And that's a big event, and it's important to you all because once the appraisal roll is certified, you can begin the process of setting your budgets and understanding what sort of tax revenue you can expect this year. And this is where Dennis Hart, that's here with me, will speak to in depth in a few minutes and help you with that process. But once the tax rate process is done in July and August and going into early September, eventually the bills are mailed. And those are generally mailed October 1st. They are not due until February, or they're not delinquent until February 1st. So property tax bills are a little unusual in that you receive the bill and it's really not delinquent for 4 months. And this was there, I think the legislature provided that time period, and this is nothing but just my opinion, but it gives people that time period to know how much they owe and to get that money together or to be saving and be prepared for that. But regardless, on February 1st, under normal circumstances, the taxes will become delinquent and they will begin to accrue penalty and interest. And if we have time tonight, we'll talk about that a little bit. we brought a chart with us that'll show you how that penalty and interest accrues. And some of you, I'm sure, are aware that the initial 4 or 5 months, the penalty and interest accrues substantially. After that, it's not so much. But and then on July 1, if you see there at the bottom of our tax calendar phases, the delinquent taxes are turned over to the law firms for collections, and we engage in letters, phone calls, tax suits. But hopefully we'll have time to talk a little bit about that tonight, but I know we want to spend the bulk of our time talking about setting tax rates. There at the bottom of the tax calendar phases slide that is on your screen, you'll see a link to the comptroller's website. And that link, that portion of their website, provides a lot of information about property taxes. And I think for some of you who are maybe new to serving on a taxing entity or new working at a taxing entity that actually levies and collects a tax, you'll find a lot of helpful material there. There are taxpayer pamphlets. There are tax property basic pamphlets that are published by the comptroller. And the comptroller has a division that you can call and speak to and ask questions, which brings me to my friend Dennis Hart. Linebarger Law Firm, as you mentioned earlier, has been collecting taxes for 40 years, but our clients always have to set a tax rate. And in doing so, there are always questions about that. Dennis Hart worked for the comptroller and the State Property Tax Board for a number of years, and one of his jobs there, main job, was to assist taxing entities in setting their tax rates. Dennis conducted seminars all around the state every year to help with this, and when Dennis decided to retire from the state, our firm stepped in quickly and recognized that resource, and we've had Dennis with us now 7 or 8 years, and our clients are able to call Dennis in any time of the year, but certainly when they're setting their tax rates. And since he prepared a lot of the materials that the comptroller uses and did that for a number of years, he's an incredible resource, and we're real happy to have him with the firm and to help us with those questions. So with that, we'll let Dennis talk in depth about truth in taxation and how a emergency services district sets the tax rate.
Great.
Dennis?
Thank you, Glenn. Thank you. And Cliff and Clay, thank you guys for having us here tonight. Before I begin, a big caveat. As many of you know, we're in session right now. The legislature will be in session until the end of May. The laws I'll talk to you about very well could change, and some could change substantially by the end of this, by spring. So the method of setting your tax rate, the forms you're going to use, the notices, the hearings that are required could change substantially. So just, again, I wanted to let you know that. What I'll talk to you about tonight is how the law exists right now, what you do today, what you do this year to set your tax rate. The current truth in taxation laws actually date back to about 1978 when the Texas Constitution was amended. So they're almost 40 years old. The first truth in taxation provisions for setting your tax rates actually went into effect 1979. And since that time, there are a number of steps that you, as well as cities and counties and other taxing jurisdictions, have to go through before you have a legal levy, before you can set your tax rate. I believe most of the emergency services districts were created under Texas Health and Safety Codes, Chapter 775 and 776. And again, the truth in taxation provisions, which you set your tax rates by, come to us from the Texas Property Tax Code, primarily in Chapter 26. There are two main purposes, if you will, behind truth in taxation laws. One, to make taxpayers aware of the tax rate proposal, their estimated taxes. Glenn mentioned the appraisal notices that you get in April and May. That's just a kind of a brief summary, if you will, of what your taxes could be. Now, we won't know what taxes are until, of course, the commissioners set the tax rate and tax bills are mailed, and we know the levy in the late summer. Second purpose is to allow taxpayers in certain cases to roll back or limit the tax increase. And rollback elections, which I'll talk just briefly about towards the end of my time here, do apply to emergency services districts as they do to cities and counties and school districts. So again, you will, some of you, unfortunately, I hope it doesn't happen, but possibility that should you exceed your rollback rate, your property owners could petition for a rollback election. There are 4 guiding principles, if you will, behind truth in taxation. Again, I mentioned the taxpayer's right to know if property value increases and estimated taxes. That's the appraisal notice that you get in April or May. There's an obligation of the jurisdiction to calculate and publish the effective and rollback tax rates for the Emergency Services District before you adopt your tax rate. And I'll go over that calculation for both the effective rate and the rollback rate in a few minutes. There's also an obligation of the Emergency Services District to publish your effective tax rate in the newspaper and hold public hearings if you exceed your effective tax rate. In fact, the law says if you go higher than the effective tax rate or the rollback rate, whichever is lower, you will be subject to additional notices and public hearings. Unless, and there's a caveat here too, you're a small taxing unit. And I'll talk to you, those of you that are small units, in just a minute. Finally, there's a voter's right to call for a limit or to roll the tax rate back. And this is the rollback election process. You may be familiar that school districts, that's automatic. If school boards adopt a tax rate above the rollback rate, automatically election is called. Voters get to decide whether or not the school gets to keep that rate. For emergency services districts, for counties, for cities, for other jurisdictions, it takes voter initiative to petition for an election, and with a proper number of valid petitions, they can then set up a rollback election, and the jurisdiction will vote on whether they get to keep that higher tax rate. I want to also go over the dates. Glenn mentioned some of the dates in the tax calendar. There are actually some important dates for the Truth in Taxation calendar as well. Beginning with April 3rd. I know we've mentioned this several times, but those appraisal notices that you get in April and May are very important in that they do give your property owners an idea of what their value will be this year. Now, again, on that notice is an estimated tax rate. In fact, actually, it's last year's tax rate. So they can kind of briefly plan on, well, if we keep last year's tax rate on my new value, my taxes could be this dollar amount. Now, we won't know the actual tax rate, though, until probably closer to the end of August or early September. Glenn mentioned July 20th. Our appraisal review boards have to approve substantially all of the value on the appraisal records. For most of you, that's at least 95% of the value on the appraisal roll, actually the appraisal records. Our counties of over 1 million population, the board of directors of the appraisal districts can decide that they can require the ARB to approve 90% of that value and also push that July 20th date back to August 30th. Now that's, again, primarily Harris County and Dallas County. For the rest of us, that July 20th date will prevail. July 25th is the date our chief appraiser has to certify the value. Of course, the appraisal records, as approved by the appraisal review board, become the appraisal roll when certified by the chief appraiser. He or she then gives those rolls to our jurisdictions, including the Emergency Services District. At that time, you can begin your calculations for your effective and rollback tax rate, begin the hearing process, and getting into your budget process as well. Around August 8th, jurisdictions other than cities and counties, school districts and water districts have to or should be publishing their notice of effective and rollback rate in the newspaper. This applies to you folks, the ESDs. By August 8th or as soon thereafter as practicable, you do want to have in the newspaper at least your effective tax rate notice and the applicable schedules I'll talk to you about in just a moment. Another exception here for small jurisdictions, but I'll go over that in just a moment. September 29th is a very important date for all of you, whether you're a school district, emergency services district, a city or county. That is the date this year that you have to adopt your tax rate. Failure to adopt your rate by September 29th means that you will be penalized by having to adopt the lower of this year's effective rate or last year's tax rate. That does apply to ESD, so be aware of that September 29th date. If by chance your chief appraiser sends you your appraisal roll late, that is after July 25th, okay, you still will have 60 days in which to adopt that rate. So again, the deadline is September 29th or 60 days from receiving your appraisal roll, whichever is later. But be aware of that important date, because if you miss that date, you will be penalized by having to possibly adopt a rate lower than what you'll need to cover your budget. I want to talk now to a law that was added to the tax code, oh gosh, it's been there probably 15, 16 years now. That's section 26.052 of the property tax code. This statute states that a small taxing unit is one that adopts a tax rate of 50 cents or less per $100 and imposes a total levy of $500,000 or less. I know that Clay told me that probably half the districts, I believe, do fall under the small unit provision. So, in fact, many of you out there hopefully will fall under the small unit provision. If you do, it's a very simplified tax rate adoption process. There's no requirement to publish effective tax rate in the newspaper. You still have to calculate an effective and rollback rate, but there's no requirement to publish it. There's no requirement to have public hearings on tax increases or the 2 quarter-page ads, which can be very expensive in some of our big city newspapers. So again, if you are commissioner on a small taxing unit where your total levy is less than $500,000, you may be subject to that very simplified and very inexpensive tax rate adoption process. And by the way, that comptroller form, there's a special form for small units. It's comptroller form 50-757 on their website. And I'll talk about the requirements of that in just a couple minutes, but if you have to publish that form, that is in lieu of or in place of additional notices which the larger districts have to do. So let's talk now about the effective tax rate, why it's so important. The news media and your neighbors and a lot of folks like to talk about last year's tax rate. And if last year's rate was 4 cents and you plan on adopting 5 cents this year, well, you must be increasing your taxes, right? Well, not necessarily. What if 5 cents this year only brought in what 3 cents would have last year? We need a benchmark rate, and that's the whole purpose of the effective tax rate. It's essentially a rate that when applied to this year's property value that was also taxable in 2016 will give us approximately last year's tax levy. Again, it's a rate that raises about the same total revenue as last year on just those properties taxable in both years. But how do we get there? Well, it's a little more complicated. The actual calculation is about 29 steps to get to the effective tax rate. But essentially it's this. We start with 2016 taxes, okay? We subtract from that amount, and when I say taxes, I'm talking about levy taxes. At this point, for our calculation purposes, what we collect really doesn't matter. It's what we levy, the total taxes that were levied last year. So we start with 2016 taxes. We subtract taxes on property value that we're going to lose this year for a number of different reasons. Let's say we have a piece of property last year that was on at full market value. This year, they qualify for a religious organization. Or this year, the property owner qualified for ag use on his or her property. So where we taxed that at full market value last year, this year we're only taxing that on an either exempt value or especially reduced value. Of course, if it's exempt, it's not even going to be taxed this year. So again, we have to kind of bring things back to parity, and that's the purpose of the effective rate. So we'll start with 2016 taxes, take out taxes on property value we're going to lose this year due to first-time or increasing exemptions or special use appraisals such as ag or timber use, and we're going to divide those taxes by adjusted 2017 taxable values. What do I mean by adjusted? Well, again, just those values on properties that were also taxable last year. So if we're going to adjust last year's taxes, we have to adjust this year's value. That multiplied by 100 is essentially our effective tax rate. By the way, I'm hoping that the individual or individuals that your ESD uses to do your calculation and publish in the newspaper is either the county assessor collector or someone who is registered with the Texas Department of Licensing and Regulation. That they are strongly recommended to at least register with TDLR, or again, if your county assessor collector does this, he or she already has a certification through their own certifying organization. The second rate that you should be aware of is your rollback rate. Now, the rollback rate is not as complicated to calculate, and it's also different in that whereas the effective rate is more of a benchmark rate for you, giving you an idea of if we go above this effective rate, we'll actually be increasing taxes. The rollback rate is a limiting rate. It tells us how high we can go up, how high we can adopt without voters telling us, no, you can't have that rate, we're going to roll you back. So the rollback rate is composed of two components, if you will, your operating taxes and your debt taxes. Now, the effective rate In that calculation, you never separate out operating taxes from debt taxes, but you do for the rollback rate. It's very different. There's a separate calculation for your maintenance and operations rate. There's a separate calculation for the jurisdiction's debt rate. The rollback rate is, about 13 steps, if you will. And let me just briefly go back. I want to talk something about the effective tax rate before I get to the rollback rate. I mentioned the 29 or so steps in that calculation. There is a very important step which I do want everybody to be aware of, and when you see this step later this summer, it's important that as an ESD commissioner, you are talking to your chief appraiser or your assessor collector about this particular step. That's line 21 of the calculation. Line 21 is the 2017 value of new improvements and new personal property in a new improvement. Why is that step so important? Well, because, think about it, the legislature for many years has allowed you to subtract the value of new construction and new personal property in a new improvement from the calculation. That gives you, the ESD, more levy without lowering your effective tax rate. That's a good thing. So again, you'll need more levy to provide those services for that new construction. So it's an important step. Line 21, I can't swear it'll be there by after this legislative session, but hopefully it will be, and it's a step that you need to be aware of. Getting back to our rollback rate calculation, I did mention that there's two separate components, the operating rate and the debt rate. You should be aware that the debt rate that you calculate, and for most of you that will publish in the newspaper, if again you're not a small taxing unit, that debt rate that you publish in the newspaper should be the rate that you're actually adopting. I'm often asked, Dennis, can we adopt lower or higher than the published debt rate? Statute section 26.05A1 says you are to adopt the published debt rate. That is the one published in the newspaper. So please be aware of that. By the way, that rollback component, the operating component of your rollback rate, for many, many years, you've had a limit, or you could go up 8% on your operating taxes. That still exists today. Whether that's still true by the end of this legislative session, I don't know. But there are some bills you need to be aware of that could limit that. But right now, as the law exists today, you're still allowed to go 8% above the operating effective tax rate. Let's talk a little about that small taxing unit notice I mentioned before. For those of you, all of you, of course, have a tax rate of less than 50 cents. Most of you are 3 cents or 8 cents or even 10 cents. But many of you may or may not meet that $500,000 levy threshold. If you are below the $500,000 levy threshold, you are considered a small taxing unit. And your adoption process is much, much simpler than your larger brethren, in that you don't have to publish your effective tax rate in the newspaper. You don't have to have the 2 public hearings if you're going above the effective tax rate. And there's some other notices that you don't have to do as well. But if you are a small unit, okay, there is a special notice the comptroller provides. It's again 50-757, that on that notice, and you can actually put this in the legal section of your newspaper, or mail it to every one of your property owners at least 7 days before you adopt your tax rate. This simply has the name of your ESD, your proposed tax rate, the time, date, place to adopt your tax rate, and if you are exceeding your effective tax rate, you must tell the public by what percent you're going above the effective tax rate. Simple as that. This ad, which it can be very small, and again appear in the classified or legal section of your newspaper, which saves you money, is all that's required to adopt your tax rate and set a legal levy. And again, you want to have this published or at least mailed to your property owners at least 7 days before the commissioners meet to adopt the ESD tax rate. For the rest of you, though, the larger ESDs, okay, you will have to publish a notice of effective tax rate. This is Comptroller Form 50-212. It's been around for a long time. The wording and format of this form are prescribed by Comptroller Rule. You may combine this with other jurisdictions. In fact, you'll probably notice in the paper this summer that ESDs and the other special districts have their notices together. That's fine. The comptroller recommends at least 8-point type or larger for the publication of this ad. And you can also publish this ad the same time as your notice of public hearing ad, which some of you will have to publish if you're exceeding your effective tax rate. The requirements also on this ad, although again it's not a quarter page, it recommend 8-point type or larger, but with this notice, which has information like your effective rate, your rollback rate, your debt rate, last year's value, this year's proposed value, also has a statement of increase or decrease. And here's an important part where you are comparing and you're showing the public if you were to adopt your effective tax rate, okay, what increase would that be over last year's taxes? There's a special calculation used for that. In addition, you're going to have a Schedule A and B, that is most of you will, that accompanies this ad. Schedule A is the ESD's unencumbered fund balance, your estimated fund balance in your budget at the end of this fiscal year. Now, when you begin to work on this, usually July or August, many of you will not be at the end of your fiscal year. I'm guessing that's probably the end of August or September for most of you. So this is simply an estimate of what funds you estimate to have on hand at the end of the budget year. This tax code says you were to list the property tax related fund balances. However, there was an important Supreme Court ruling several years ago that the Supreme Court said this notice should contain all of your fund balances regardless of their source, whether that's sales tax, property tax, or other sources of revenue that you have. List those fund balances on Schedule A. Those of you that do have debt, if you're an ESD, you are required to list your debt service requirements for the coming year, your debt rate for this year, and some of your fund balances that you applied towards debt to lower your debt. So, how do you determine whether or not you need to publish additional notices and hold public hearings? Well, for one, your assessor-collector calculates the effective and rollback rates. We talked about that. Your assessor-collector is going to report those rates to the ESD commissioners. He or she is going to publish the effective and rollback rates in the newspaper. Again, this is if you're not a small jurisdiction. At this point, though, the ESD commissioners get involved and they have to comply with our truth in taxation laws to see that the public is informed of these notices and you are adopting a legal levy. Fifth, the governing body will determine if the proposed rate may trigger special notices and public hearings. So we'll talk about that now. What determines that? Do you need to publish notices and hold public meetings? If your proposed tax rate for 2017 does not exceed the lower of your rollback rate or your effective rate, for most of you, your effective rate will be the lower rate. If it doesn't exceed that rate, smooth sailing. It's going to be pretty easy to adopt your rate. The commissioners will post their open meeting notice for a regular meeting. The governing body will adopt the rate as a separate agenda item. And again, if you have both operating and debt taxes, you must adopt the rate in two parts, both your operating tax rate and a debt tax rate. Pretty easy. However, what if your 2017 proposed tax rate exceeds the lower of your effective or rollback rate? And again, for most of you, your effective rate will be the lower rate. Well, at that point, you're going to be looking at additional notices, you're going to be holding public hearings, and you're going to be asking the public to give their opinion or voice their opinion at those hearings of the proposed increase. The governing body should be planning a calendar. The ESD commissioners will plan a calendar of the events that are to happen. Again, you're going to have to look at least 2 or 3 newspaper ads, set 2 public hearings, and then set your final meeting to adopt your tax rate. I encourage you, my phone number is at the very end of this, and please, if you have questions about setting your calendar this summer to adopt your tax rate, I'm happy to take those calls and help you in setting your tax rate adoption calendar. The first thing that we're going to be looking at if you do propose a rate that exceeds your effective tax rate is having 2 public hearings. It used to be you had to have 1 public hearing. That law was changed many years ago to now require that you have 2 public hearings to tell the public of your proposed tax increase and why you're increasing the levy of the ESD. This notice must contain certain information. 1, it has your proposed tax increase percentage. That is, the proposed rate exceeds your effective rate by blank %. It has the hearing date, time, and place for each of the 2 public hearings. It shows how each of the ESD commissioners voted on the increase, whether they voted for it, against it, they abstained, or they were absent from the vote. And finally, there's a comparison of taxes on the average home in the Emergency Services District. This is based on home information, home appraisals provided by your chief appraiser. And let me just say, your chief appraiser in your appraisal district is instrumental in all of this process, in that most of the values and data to adopt these rates are coming from the county appraisal district. The publishing requirements for this ad, the notice of public hearing, actually hearing, it's called hearing, but it's a plural hearings, on your tax increase, it must be at least a quarter-page size in a standard or tabloid-sized newspaper. It must appear at least 7 days before the first public hearing. My rule of thumb is if this goes in the newspaper on Wednesday, count day 1 is Thursday. On the 7th day, you can have your first public hearing. That's perfectly permissible. This ad, unlike the small tax unit ad, cannot appear in the legal or classified section of your newspaper. Don't put it there. It'll be in violation. The headline, the heading of this ad must be at least 24-point type or larger. Okay, the rest of the ad, the body can be smaller, but the heading must be 24-point type. Remember, it's at least a quarter page in total size. And please follow the wording and format as prescribed in statute and shown to you by the comptroller on their website. By the way, this ad is, just to let you know, it's section, I think, 50-197 for this ad. It is on the comptroller website. That's with the form number for last year. In addition, if your ESD operates, controls, or has access to a website, you are, by the way, it's 50-197 are the requirements. If you operate or control a website, and many of you do, you are going to have some additional requirements to post not only this ad, but the second ad I'll talk to you about on your website at least 7 days before your first public hearing and continuing until the second public hearing. In addition, if you have free access to a public television station, you should publish this as a 60-second TV spot for 7 days, 5 times a day between 7 a.m. and 9 p.m. before your first hearing. Now, most of you won't have that, but many of you do have access or do control a website, so you do want to post this first quarter-page ad on your website running before the first public hearing and through the second public hearing. By the way, the web posting is essentially the same as the newspaper ad. It contains essentially the same information as that notice in the newspaper. The requirement does not apply to a jurisdiction that cannot comply due to some electronic or mechanical failure or other circumstances beyond your control. In addition, a property owner cannot get an injunction against you if, again, the website goes down or you can't get the ad on the television site. The second notice which is required is called the Notice of Tax Revenue Increase. This is your second quarter-page ad. It's Form 50-198 on the comptroller's website. This ad, which is also a quarter-page in size, is published after each hearing. Now, there are many attorneys in the state that feel like because you publish, or if you publish this one time, that is after at least the first public hearing, you've complied with the spirit of the law. These ads are quarter-page in size. In the Houston Chronicle can be very, very expensive, or even some other papers can be very, very expensive. There are many attorneys who believe that by publishing this Notice of Tax Revenue Increase ad one time only, that is not after each public hearing, but just after the first public hearing, you are in compliance with the statute. But again, talk to your attorney about that. You may be able to save some money. As I said, this ad is published after each public hearing, but before you adopt your tax rate. The wording of this ad, like the other Notice of Public Hearing on Tax Increase, is dictated by statute. Please don't change the words or the format of this ad. And this ad, again, also is going on your website if you have a website, and should be on the public television station if you have free access to a public TV station. So you've published your hearing ad, you've notified the public of your 2 public hearings. Let's talk about those public hearings now and some of the requirements for them. A public hearing where you're allowing the public to voice their opinion on the tax increase must be held on a weekday, not a public holiday, not a weekend. You must comply with the Texas Open Meetings provisions, posting your 72-hour meeting notice, of course, and you must have a quorum of your ESD commissioners present at these hearings. The public has a right to present their views. You can limit their time to speak, but everyone has a right to get up and vote and voice their opinion, pro or con, on the tax increase. At the second public hearing, the ESD commissioners will announce the date, time, and place of adopting the tax rate. And by the way, that meeting to adopt the tax rate cannot be earlier than 3 days nor later than 14 days after the second public hearing. And the two public hearings, they should be at least 3 days apart. Please be aware of that. Our final meeting to adopt the tax rate. Open meeting law requires, of course, that the commissioners do post proper notice 72 hours ahead of time. They require that our adoption of the tax rate is a separate item on the agenda. As I said earlier, the adoption of the tax rate is no earlier than 3 days nor later than 14 days after the second hearing, unless you do have that website requirement. If you are providing these notices on your website, that meeting to adopt the tax rate has to be 7 to 14 days after the second public hearing. It's just a little quirk in the law, but again, remember that if you are publishing on the web, it's 7 to 14, not 3 to 14 days. And again, adopting the tax rate is done by official action, whether that's an ordinance, order, or resolution. Your attorney can advise you on that. And something new in the law this year and last year, it does require that at least 60% of the ESD commissioners vote in favor of the adopted rate. So that 60% provision is something new. It seems to make sense. Obviously, a majority has to do that anyways. And something else, on the notice of the tax revenue increase we talked about just a minute ago, on that notice, you also have to state the purpose of the tax increase this year. That's a notice, a change that went into law last summer. It's still there this summer, and will probably be there as well. The meeting to adopt the tax rate. Be aware there's a special provision in the tax code, section 26.05b, that says that cities and counties and special districts, including emergency services districts, not water districts, that adopt a rate above the effective tax rate must take a special record vote on the ordinance or resolution or order to adopting that rate using special language in the motion. In addition, there's a provision to use a bold type for part of that ad that explains your increase on the tax rate and the taxes that will be, or the increasing taxes on a $100,000 home in that motion. That special motion also has to be included on your homepage of your jurisdiction's website if you are increasing your operating taxes. If you have questions about that special language, again, please call me this summer. I'm happy to go over that with you. And remember, as an ESD, like other taxing jurisdictions in the state, the law requires that you adopt your tax rate no later than September 29th, or at least the 60th day after receiving your certified appraisal roll from your chief appraiser, whichever is later. Failure to adopt within that time period means that your ESD could be penalized by having to adopt the lower of this year's effective tax rate or last year's rate. And again, that could be devastating for some of you folks. What if these requirements are not followed? I almost hate to bring up this slide because every year I'm asked, gosh, Dennis, we didn't do our 2 public hearings, we did 1 public hearing. We published one of the quarter-page ads, but not the second one. What can happen? Well, if a governing body does not follow procedures and comply in good faith with truth and taxation statutes, any taxpayer can obtain an injunction against you. And if they approach a district court before you adopt your tax rate and show the judge that you've not complied in good faith, he or she can shut down the process, order you to go back and start at step 1 and to comply before you adopt your rate. That may push you over that September 29th deadline and force you into a lower rate than you really need.
Ouch.
Before we get into tax collection activities, I also wanted to briefly talk about rollback provisions. And yes, as an ESD, you, like cities and counties and other special districts, are subject to rollback. Now, for an emergency services district, it does require first that commissioners adopt a rate above the rollback rate, okay, and that then your property owners and voters petition for a rollback election. That will require at least 10% of your registered voters to start a petition calling for a rollback election. Now that's 10%. In fact, if your entire levy is less than $5 million. If it's greater than $5 million, it'll require only 7% of the registered voters to petition successfully for a rollback election. They have 90 days to do that. Within 90 days of adopting your tax rate, that required 10% or 7% must successfully gather petitions calling for an election. At that point, within the 90 days, the ESD commissioners will have only 20 days to determine whether or not that petition is valid. I caution you, if you determine the petition is not valid due to improper signature, you can't verify the voter, you can't verify their address, or some other reason, please state the reason in writing as to why you find the petition to be invalid. However, if you do find that the proper number has been met, okay, at least 10% or 7% do meet that threshold, you are going to have to set a rollback election. And then remember, that election cannot be any earlier than 30 days nor later than 90 days after the last day you could have ruled on the validity of the petition. Of course, hopefully, in your case, if the election fails, it means that they didn't roll you back to the rollback rate, and life is good. Your assessor collector usually will mail tax bills before the election happens, because many of these, we're not going to wait till after the election. You are allowed to mail bills before a rollback election. However, if they do roll you back, okay, well, at that point, for those people that already paid their taxes on the first bill, they're going to get refunds, because obviously your tax rate now will be smaller, lower rate than what it was. You'll be at the rollback rate, not higher. And for those of you who have not paid your taxes, or your property owners who have not paid taxes, they will receive new tax bills from the assessor collector. And he or she will adjust that delinquency date from February 1 to some date in the future. And what the law says is they are to add the number of days between old bills are mailed and new bills are mailed, add that number of days to February 1. So it very well could be that you will not be getting your revenue in until the end of March or the beginning of April or some other date after February 1. And of course, that's a worst case scenario. There are not a lot of rollback elections for ESDs in the state. You're probably much more aware of cities and counties being rolled back. For school districts, of course, this is automatic. We have had numerous school district elections over the years, but not really as many for emergency services districts. Glenn, did you want to?
Well, before we move into tax collection services, I think you bring up some really obviously interesting points. One is, what an amazingly simple process. That's unbelievable somebody dreams that up, or dreamt that up, as they'd say.
Can I just interject right here with one question that we had from the Corpus area? Dennis, where can they find the steps to calculate the effective tax rate and the rollback rate? Somebody wants to know actually where those 27, and I think you said there's only a mere 8 steps for the rollback. Well,
actually, it's more. It's more like 13, but there's like 29 and 13. The comptroller's website, and again, I can if you'll go to the comptroller's website, local taxes, which is the property tax assistance division, is part of that. You will see all the forms for counties, cities, emergency services districts. They're all there. In fact, there's even a video there to show you how to do the calculation. We used to tour. The comptroller used to actually have tours. I used to give those each year in live tours. We'd go out and explain step by step to do that. But now there's a video to do that. So you do have a chance to go to the comptroller's website, click on the video, watch the steps, and all of those forms, all of the calculations are there in a downloadable, printable format.
Awesome. Thank you.
One of the things that you were mentioning, Dennis, that I guess I want to reiterate because of the importance of it is, you've said a number of times that if you need help with setting your tax rate adoption calendar, to call me. I know a lot of you out there, the commissioners, working with your county collector offices, you begin to be pressured to get your tax rate adopted and get that rate to the county collector's office, because they have to incorporate that into their system and prepare the bills. I think you've seen from this long process that if you don't get started early, and if you don't pay attention to the dates and the deadlines, especially if you're in a county that only publishes a newspaper maybe twice a week, It can be difficult to accomplish this in a 4 to 5 to 6 week time period. So I guess I just wanted to comment on that again, that getting started quickly
absolutely,
is
Glenn,
imperative.
You bring up a good point. Many of the folks I talk to do have basically once a week newspapers, or even once every 2 weeks. And if that's the case in your district, you need to begin this process early. Again, hopefully you're getting those certified values by the end of July, but don't delay on beginning those calculations of your effective and rollback rate, and certainly getting those notices in the newspaper as soon as you can, because you're going to be dealing with budget hearings as well. And these budget hearings can often take time, and I know there's sometimes some discord on exactly what budget they need this summer and this year, but those budget hearings running into the tax rate adoption process can sometimes delay this process. You don't want to miss that September 29th deadline.
Looking at one of your slides, you mentioned the relatively new requirement that at least 60% of the governing body, in the case of ESDs, that would be the commissioners, must vote to adopt the rate.
And vote in favor of the rate.
In
Yes.
favor of that rate, yes. And I use this example because I think people can begin to see what was happening is, if you had, and I'll just use the Commissioners Court for an example, if you had 5 members and a couple of them chose to not attend the meeting when the rate was going to be adopted because they didn't want to be on the record of having voted, you ended up with only 3 commissioners attending the meeting, and then it only took 2, a majority of the quorum, to adopt the rate. And so what was happening is 2 commissioners would set a tax rate for a 5-member county commissioner board. So it's understandable but interesting, to say the least, that the legislature continues to work so hard in trying to inform the public of the tax rate and the effect and possible increase in taxes. Yet, and this is nothing but editorial, it's so complicated, I don't think half the people can understand the ad.
Well, it's interesting you mentioned that too, and be aware, I may have mentioned this earlier, the date to adopt your tax rate can be any day. It can be a legal holiday, it can be a weekend, any day of the week is appropriate to adopt your tax rate. That's not true for your public hearings, okay? But to adopt the tax rate, any day, even a holiday. So there really is no excuse for folks not to make that quorum.
ESD boards are statutorily have 5 commissioners. So just like a county commissioner's court, right? So if they don't have, let's say they don't, sometimes it's hard to find people change, and they only have, say, 3 commissioners appointed. I know some ESDs are right now working with 3 commissioners. Does it matter for that 60% number if they've only got 3 appointed on the governing body? Because then 2 would still be 66%.
Well, that's a good question. Clay,
You have to talk to a lawyer
That's an
to get an
ESD
answer
attorney
on that.
question. I knew it as it was coming out of my mouth. I said, that's probably something I asked the ESD attorneys on.
That brings up the idea, and jokingly said you probably should talk to your attorney about that. One thing that I think each of you out there, commissioners and staff with ESD, should at least be aware of is that you do have a tax collection attorney working on your taxes. Oftentimes, especially in the smaller districts, that's going to be whatever law firm is collecting the county property taxes. So for some of the larger districts, I think you have your own contracts, and it's something that's bid upon by various law firms. But let's take a moment and look at the tax collection activities, and I know we want to have time for phone calls or text message questions and things. Once the tax rate's set and the bill's mailed in October, as we talked earlier, it goes delinquent on February 1st. And ultimately, penalty and interest accrues. And on July 1st, the law firms, tax collection law firms, will begin collecting on those properties. And I'm summarizing this process greatly. But those activities range from letters to phone calls to filing of hundreds and thousands of tax suits, depending on the size of the county, as well as selling property, that is foreclosing the tax liens. And the ESD taxes have a tax lien on every piece of taxable property, just like the city, county, and the school does. And they will they will go through this process, the law firms will, such as the Linebarger firm, to foreclose that tax lien and to sell that property at a public sheriff's sale. Various things can happen along the way. Obviously, we hope for payment. But bankruptcies, mentioned there at the bottom, occur, and that stops the process. And proofs of claims and things in the bankruptcy process have to be pursued. But before we run totally out of time, I want to take a second and jump to another slide for a minute. Many of you probably heard that taxes, penalties, and interest, or I'm sorry, penalties and interest on taxes can grow substantially. This is a breakdown of the statutory penalty and interest that accrues on a delinquent tax. And if you notice there on February 1st, in February, 6% penalty accrues and 1% interest. So by letting your taxes go delinquent 1 month, you accrue 7% of penalty and interest. And I have at the bottom there a $100 tax bill because it makes the math so much easier to calculate. And you see that that tax bill went from $100 to $107. March and April, the penalty and interest increases 1% each, and in May. And you'll notice all the way through June, those increases are only 1% per month. So if you wait and pay your taxes delinquent in June, you're going to owe $115 or 15% penalty and interest. Again, this probably doesn't sound substantial, but in July, when the attorney fees are assessed to that, and those can be anywhere from 15 to 20%, I simply use 20% as my example, you'll notice that that $100 tax bill becomes $141.60. And that is a 41% increase from January 30th to July 1st. So it's important that people pay, and the statutes are designed in this fashion to encourage taxpayers to pay on time. We're having a wonderful past 3, 4, 5 years in our tax collection world with the current collections. That is, taxpayers, if you're curious to know, generally pay their taxes at a rate of about 98%. That is, 98% of the taxpayers pay their taxes within 12 months of receiving the bill. So we're only working on anywhere from 2 to 3% of the delinquent tax of the taxpayers when we're collecting delinquent taxes. But that's probably something for another time to go much deeper into the tax suit process. But I wanted you to be familiar with the penalty and interest that accrues, and also with the basic activities. Most of you have an agreement with your county tax office to collect your taxes by statute in your health and safety code. The default is the county tax collector's office. And if you look at your interlocal agreement, you'll notice that it will provide that oftentimes you will use the tax collection lawyer that the county uses for simplification purposes. So you have resources out there. I encourage you to talk to your law firm if you have questions. And before we take a few questions, I again want to compliment Dennis. I think it's obvious after all of that, you understand why the law firm went out and hired Dennis Hart to help us with truth in taxation. It was his life for 25 years, and it is not a simple process.
No, and this is much condensed. This usually is about a 4-hour talk, so I
can tell it's a lot of stuff to go through
very quickly. But thank you, Glenn.
It's certainly not safe to do that talk at night. It can put you to sleep. 4 hours.
Yeah.
Let's real quick grab some questions here. I'm going to go straight into them. If you have additional questions, Cliff will put the email up on our screen, and we can maybe get to them later. But we've got a pretty full queue as it is, and we're running out of time. Another question from Nueces County, the Corpus area. So they're watching us down in the Coastal Bend region. In regards to a notice of tax revenue increase, does a Facebook page count as a website? So there's a requirement that you have to post the notice of tax revenue increase on a website. Does the ESD's Facebook page? Because a lot of them have no website, but some of them have Facebook pages instead.
That's an interesting question, Clay. And I don't have a good answer for you other than if you have a Facebook page, I strongly encourage you to put those notices on that page. Whether or not that is considered a home page, as the statute talks about your website, it's hard to say, but I would certainly encourage you, if you've got a Facebook page, put it on there, by all means.
And I want to clarify something. If you exceed the rollback rate or the effective rate,
Well, if you exceed the lower of the effective or rollback rate, you are looking at additional 2 public hearings and the additional notices. If you're not a small ESD.
okay, that's what I wanted to get to. If you're still exempt from that, even if you exceed those rates,
absolutely,
the lower of those
which
two
is
rates,
interesting. If you're a small ESD, that is under $500,000 levy. Okay,
and that's just property tax levy. That doesn't take into account
that's
sales tax?
just property tax levy. But if you're a small ESD, you are still subject to possibly a rollback election. But the additional notices, the quarter-page ads, the 2 public hearings, none of that's required. Now, what's interesting though is even on the small tax unit notice, the rollback rate itself is never published.
It's not published.
So really, one of your property owners would have to call the assessor collector to find out what your rollback rate is to know that you've exceeded that. So it's a kind of interesting quirk in the law. But should you exceed it, they still can start a petition after you adopt to call for an election.
A question from one of our Harris County ESDs. The state comptroller made available a step-by-step handbook.
Yes.
This was last published in 2013. Do you have any information on whether they'll provide one this year?
I'm asked that all the time. I don't know. I used to actually help write those textbooks, and we had one originally. Then we made a separate one for school districts and everyone else. But I don't know if they plan to or not. I certainly hope that they do in the future. But they do have a good video online that goes over the calculation. I just don't know when or if they plan to have a textbook again.
Okay. One of our commissioners came back and asked that they want to learn more about what the rollback rate means, and they want to really delve into this. The reason they ask, and that leads into another question we have, he states that there's a lot of development in their area. Where we're sitting right now in Travis County ESD number 2 is a high growth area. Is there a situation where and I'm doing this just in my head, can the effective rate, which is the rate that gets you as much money as last year, can that exceed? Can you get in a pocket where the calculation equals an effective rate that exceeds the rollback rate plus 8% or whatever that will trigger a rollback election?
Simple answer is yes, but that rarely happens with ESDs. The rollback rate can sometimes fall below the effective rate, but there's 2 primary reasons for that. One being the additional sales tax to lower property taxes. Now again, that's not something ESDs currently have. I know you have a sales tax. This is a special sales tax specifically to lower property taxes. That's only available cities, counties, and hospital districts currently. The second reason that could happen is for a jurisdiction that dramatically drops or eliminates their debt rate, their rollback rate can fall below the effective rate. So again, those 2 occurrences would not really be the situation for an ESD. So I don't see that happening for an ESD as far as the rollback rate falling below the effective rate. By the way, you did bring up something else important. In an area of high growth like that, where you have an ESD with lots of new construction, I mentioned that step 21, which is so vitally important in the calculation. The more value you can show is for new construction and new personal property within a new improvement, that is personal property located in a new structure, that is good for the ESD. It gives you additional revenue without lowering your effective tax rate. Allows you to have a higher rate to provide those services for that new construction.
Okay. I think we're getting the most of them. It's not automatic that you have to use the county assessor collector, and there are other entities that you can contract with. Because I know one of the things you all can contract with out there is you can get a contract with your county tax assessor collector to do the stuff we've been talking about. Now there are other entities that do that.
No, I think your code section in Chapter 775, and it's .074. It's actually very simple in one sentence, and it states, the board shall certify the appraisal, let me start over. The board shall certify the ad valorem tax rate to the county tax assessor collector, who is the assessor collector for the district.
Okay.
So I think some districts may have a different law firm than the county's using in the large districts. But in the smaller districts, they're going to default to the law firm that's representing the county. Right. And I'm sorry if I'm misled in that. Certainly, the statute says that you will use the county tax assessor collector.
Okay, we are just about out of time. Is there a statute of limitations on that? Let's say they don't comply with the truth in taxation. But they go ahead and they get all the way through the process and collect the taxes.
Believe it or not, there's not. Once you adopted your rate and put substantially all of your tax bills in the mail, you've begun the levy process. At that point, the time where a taxpayer could get an injunction is gone.
Okay.
So if they wait too long, again, they may not be able to get an injunction. So the statute says once substantially all of the bills are put in the mail, that period of injunction ends.
And Clay, remember, as Dennis pointed out, the safe harbor in this is that you tried in good faith to comply with all of it. Right. You miss a date by one day, your ad ran one day late, one day early. I don't think those things are going to be your problem. But making a good faith effort to meet all those requirements is the key.
Yeah. In my 30 years in the business, I've yet to see an injunction against a jurisdiction for that reason. So it doesn't really happen very often.
All right. Thank you guys so much. For more information in regards to that one question, somebody wants to delve into the rollback rate. Is the comptroller's website a good place to go? Or
it is, and I've also given you my phone number there at the bottom, the 512
if we can
number.
Put that slide up real quick.
And my email address if you have any questions.
Okay. Excellent. I don't know if that slide's going to...
There we go.
Okay. So thank you to Glenn and Dennis so much for being here tonight. This has been very informative. I feel like we could have gone 3 hours on this stuff, but it's really, really vital information for our ESD commissioners out there.